This is Bobby Kraft coming to you live on SNN Live, and I'm here at the Cambridge House International California Investment Conference 2014 in Palm Springs, California. With me is Nick Hodge of the Outsider Club. It's a private company. He's a sponsor here. Nick, welcome to SNN Live.
Bobby, thanks for having me on the show.
So for those of us who aren't familiar with the Outsider Club, can you give us a little background on it?
Yeah, the Outsider Club is a free daily newsletter that focuses on helping individuals manage their own money from a libertarian, independently minded focus. Okay.
This is very interesting because I want to talk about something that has been my theme at this show. And the thing is I'm a young investor. I'm part of Generation Y, 25 years old. I'm just curious from your perspective, what is it that you're preaching out there and putting out there in your newsletters that can be important for people like me to know?
Well, I like to see what young people are interested in, right? We've cut our teeth in the past few years on seeing the market collapse in 2008, and we've become very skeptical of the system. We've seen HSBC laundering money for terrorists and not being penalized. We've seen the manipulation of LIBOR and no one being penalized. So, we're very weary of the system and how it all works really against us day in and day out. So what I'm interested in is things that are real, hard assets, things that we can hold in our hands. I don't want to invest in some financial product that a guy behind a desk with a $5,000 suit dreamed up. I want to invest in things that help humanity, that help us create really new technologies and cures.
So what if someone was to come to you and say, well, okay, all right, I get that metals and it's a hard asset, but what about like an Apple? They create a product, and they're people who are investing in that company, in that stock. So what would you say to those who are looking at consumer products as opposed to just a hard asset?
I always like to say, it's all about time frame, right? So you put Apple in your IRA and you hold it for 10 or 15 years, and you collect, a dividend, or you hope that they continue to grow. I mean, that's a growth story. Speculative investments should not be in your IRA. These are junior mining stocks. These are resource companies, and that's money that you can lose. Not that you want to lose it, but that's the kind of money that you want to put in those companies. And so I would say there's room in your portfolio for both sets of those kinds of stocks.
So would you say that your point being was more along the lines of hard assets? That's what you need in order to build a consumer product, for instance, or anything regarding silver as such. Is that what you were saying?
Yeah, well, look, to make Apple's iPads, you have to have the rare earths, you have to have the silver, you have to have the graphite that goes in the heat sink so that it doesn't burn your lap when you have it on there. And those metals have to come out of the ground, and the majors, they're not going and looking for them, right? So we have to find new discoveries to replace the production that's currently going on in the boom in adopting these sort of technologies. So you have to have those minerals, and it's the juniors that go out and find where they are and de-risk them so the majors can get those assets out of the ground.
So we're at the beginning of 2014. It's still early. What are you seeing for the first half of 2014 in the junior mining market?
Well, it's still tough. We have gold down around $12.50, silver's at $20. It's tough to make money at those prices. So what I think you're going to see is a lot of guys starting to be shaken out. We've already seen majors pull back on their exploration budgets, and I think you're going to see a couple companies be shaken out. The weak hands, the ones who are raising money just to pay their salaries and not to actually bring a deposit to fruition and build value for their shareholders.
So now that we went to the first half, what do you see long term?
What do I see long term? Well,
long term, I mean 2 years.
Okay, I see.
The rest of 2014 and then 2015.
I think I probably see the return of a recession, right? The Dow's up 150% since 2009. Oil prices are at $100. Time magazine said last week that 44% of Americans are living hand to mouth. They're living paycheck to paycheck. They have less than $5,000 in a bank. You can't sustain a consumer economy like the United States is dependent on with 44% of the country living paycheck to paycheck. So I think we're in for maybe a little bit of rough times ahead. I'd get a little bit defensive. I'd start to accumulate gold and silver at these prices and start accumulating deposits that are proven and that are going to be economically viable even at continued low metals prices.
So Nick, tell me a little bit about your background.
So I came into the financial newsletter business in 2007. I was a young whippersnapper with a college degree, and I responded to an ad to research and write about stocks. Those stocks were clean tech stocks, and they quickly lost 80% of their value, as you know, in 2007 and 2008. And so I really learned a hard lesson early in that, stocks don't go up forever, and there are bubbles and there are recessions. And so you have to be really smart, and you have to do excellent due diligence, and you have to not just look at what the companies are putting out, but talk to other people that are smarter than you and have connections, and develop a network of people that you can rely on to evaluate things and help you do your due diligence.
So where can people go and find out more information about the Outsider Club and your other newsletters?
All you have to do is go to outsiderclub.com. There'll be plenty of places there for you to put in your email address, and we'll start sending you our free daily newsletters.
Perfect. So thank you for coming on to SNN Live. I'm Bobby Kraft. I'm here live on SNN Live at the Cambridge House International California Investment Conference 2014 in Palm Springs. Nick, once again, thank you.
Bobby, thank you.